Gold is the leading commodities. This means that as long as gold maintains its bullishness, most other commodities, depending on their timing and season, may follow this uptrend. Currently, the prices of all these commodities are higher than their pre-COVID levels, with gold, copper and cattle significantly higher. Consciously or subconsciously, investors and consumers sense that the cost of living seems to be remain elevated for a prolonged period. And there's always a risk that it could rise further. In fact, they are not wrong to think like that. Take steak prices, for example. In 2022, when the US CPI peaked at 9%, their prices were already high. Even though inflation has now eased to around 2 to 3%, steak prices are at an all-time high. I'm Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. Before we get into today's subject, please take some time to read into the disclaimer. We will first discuss, number one, why gold has climbed so much, why this trend is likely to continue. And number two, why other commodities, depending on their timing and season, may follow this uptrend. If you find gold too high to hedge against inflation, then who will be next? Why gold has climbed so much, and why is this trend likely to continue into 2025 and beyond? The answer lies in global debt issue and QE. Debt represents borrowed money, while QE refers to money printing. Both actions dilute currencies, and as currency become diluted over time, inflation picks up. Inflation was originally targeted at 2% per year as a benchmark. However, when debt being mismanaged with a trade deficit that is since perpetual, inflation is set to rise, as we're all experiencing it today. It is like it is alright to borrow money as long as we earn more than we spend. However, if we continue borrowing money while spending more than we earn each month, we might appear fine initially, but things will eventually become very messy. And that is why it is reflected in the gold prices all this while. How high can inflation hedge assets like gold climb? As long as global debt remains unresolved and continues to increase, and with some central banks potentially resorting to QE during the next crisis, I believe gold uptrend will persist. Why other commodities may subsequently follow gold uptrend? Because all commodities are priced in a currency. As long as debt and QE is part of the equation, currency will dilute over time, and commodity prices are likely to continue climbing. I am also noticing some breaking points in a few of them. For example, let's narrow down to crude oil. Can you see its prices have been consolidating and narrowing into a potential breaking point? Of course, the breakout point, it could go either way. Now let's take a look at the long-term trend of the currency that is tied to crude oil, the US dollars or the dollar index. Is it in a downtrend? Or how about comparing the dollar with other currency pairs that they seem better in managing their debts? What do you observe when comparing the dollar Swiss and dollar Sing with the US dollars? Why the cost of living is still a concern when inflation has declined to around 2 to 3% from 9%, where in many past elections in the past 2 years, voters have ranked inflation as their top concern. If you find inflation may stay higher for longer or potentially may even creep up again, there are a few things that we can do. Number one is to reduce our borrowings. And number two is to invest, hedge or trade into markets like gold and commodities. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to our channel. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.